Global markets are opening Wednesday with a clear shift back towards risk on, driven primarily by a meaningful de escalation in Middle East tensions and the resulting pullback in oil prices. The decision by the U.S. to pause activity in the Strait of Hormuz is being interpreted as a confidence buildup step towards a potential Iran deal, helping to ease immediate supply concerns, push crude lower, and take some pressure off global inflation expectations. That combination is feeding directly into softer U.S. yields and a broadly weaker U.S. dollar, setting the tone across FX and risk assets. In FX, the move is showing up through broad-based dollar selling and a rally in pro-cyclical currencies. The Australian dollar is leading gains, pushing to fresh multi-year highs as improved risk appetite, stronger China services data, and still elevated domestic yields underpin demand, even as the Reserve Bank of Australia signals a likely pause after its recent hike. The euro is also firmer, benefiting from the weaker dollar and improved sentiment, though gains remain somewhat tempered by lingering trade tensions and a fragile eurozone growth backdrop. Meanwhile, the yen is still holding on to solid gains on the day following the latest aggressive intervention from Japanese authorities, but the broader tone remains fragile, with rallies continuing to attract selling interest as carry dynamics reassert themselves, reinforcing the view that underlying fundamentals remain challenging for the yen despite policy support. On the equity side, the improvement in sentiment is translating into firmer U.S. equity futures, with tech leading after strong earnings impulse and broader global equities following Asia higher. The key transmission channel remains oil. Lower prices are easing inflation concerns and reducing pressures on central banks to tighten further, allowing risk assets to recover. At the same time, gold remains elevated, reflecting a still uncertain macro backdrop, even as immediate stress fades. Looking ahead to the U.S. session, focus will turn to ADP employment and broader services sector signals, which will help shape expectations ahead of the week's key payrolls release. The broader takeaway is that markets are repricing away from worst-case geopolitical scenarios, with FX and equities both responding to a softer dollar and improved risk appetite, though conviction remains conditional on continued progress toward de-escalation and confirmation from incoming U.S. data. That's all for now.